Hello guys, good morning, and of course, welcome to Forexnetworkgroup. First I must say happy new month to everyone. Today is the 1st of May, and this is another section of our weekly market analysis or review, where we try to check out what the market is gonna do probably next week. Remember, this is not financial advice. We are only telling you our view and what we are expecting of the market. These are pairs which are already on our watch list. These are pairs which we've already added to our watch list. We've already done our analysis on them and trying to find out, okay, this is what is likely to happen with this pair next week. And of course, for those that ask why we didn't really do midweek review for this week, actually, as at on Wednesday, the market wasn't like really, let's say, giving good momentum. There was no good momentum in the market, so there was a lot of indecisiveness. So there was not much of something for us to come up and talk about. So that's why we really did do midweek analysis. As most of you know, if we are coming up with something, we make sure we've already done our analysis and gotten up some good pairs which we can watch out for, just as we should be doing today. Today we've already highlighted 8 good pairs which are already giving us some tradable opportunities. That does not mean there's no opportunity on others, but they are not as clear as this one, which we've already highlighted out. So not wasting much of time, we are going to go into the first one, which is the Euro USD. For those that be following up the channel, so one thing you always know and one thing you always keep at the back of your mind is the strategy which we use. Our strategies, like, it's because it's a combination of different strategies together, and of course you should always know our reversal signals, because we are always going to be talking about them every day. That doesn't mean we are reversal traders, but what we're actually trying to say is what it gives you insight of what's going to happen probably in the next 3 day, week, months, years, and decades to come. So let's go to the first one, which is the Euro USD. And of course, the first thing we do is to mark out our zones. This is a zone where the market is probably respecting at this time. So we are going to mark out this exact zone here. Good. Okay, so we go to our trading view. Sorry, our trading which is the hourly charts. We remember we use the 4-hour and the 1-hour charts. So first we go to the 4-hour to see if we can see the opportunity which we actually highlighted in the previous one. And of course, yes, we can see it. What are this opportunity? We can see a previous support which got broken to become a resistance, then currently got broken in, which is now becoming our support again. So is the market going to hold? Is this going to hold as a support, or is it going to get broken to become another level of resistance? So what do you look at for? That's where you go into the structural analysis of the market. Let's mark out something for us which you can see from the market. Okay, let's remove this and let me use this to mark out what. Following this, you can see what series of higher highs in the market, right? Then we can also see that the market is currently on a level of on a level of what's it called, of support. And remember, those that be following this channel, I said once the market moves periodically, moves with a lot of momentum to a level of support or a previous level of resistance, there is high chance of that market reversing, going back to the previous level. Because what causes this good momentum most time is fundamentals. So there is a tendency of the market trying to go back to the previous level. So when this market might not go back to the previous momentum, which is if it makes a series of lower highs and lower lows, assuming this market was while coming down, it's formed something like, okay, let me just delete this. Then let's pick up another one. Assuming as it was coming, there's formed series of lower lows and lower highs, then you can start thinking of the market breaking above that trend line before we can start thinking of trading long opportunities. But since what brought the market to that previous support is the fundamentals, then we expect probably a continuation of the trend. So that is what we are going to be looking at for on this particular pair, which is the Euro USD. So since we've known that, now let's now zoom the market to do our candlestick analysis. So following this candlestick analysis, remember it's not on a support. So what we're going to expect is the reversal back to the high momentum, because this is a buy market. As you can see, this market has been on this buy sell for a long period of time. Let's go to the daily. Actually, I'm not supposed to show all this because this is like a waste of time, but you can see all the way from this level right here, the market has been buying, breaking higher, breaking structures and what, and building new ones. And that same thing that actually happened at this level right here. This was the previous level where this market was actually what respecting, and currently it broke that level, and what it seemed to be what to be retesting that particular level. And remember, this is the daily chart, so these are what we've done previously, just for us to give you this. So we might not be showing you all this analysis on the next on our next what's that called, assets, which are next pairs. So we are just using this to give you insight of how we're able to to develop our strategies and come up with these pairs on our watch list. So that's it. So what you're going to be expecting of the Euro USD is reversal back to the upside, which is what on our, let's go to the hourly. What you want to see now on the hourly is what the market giving us. Okay, let's go to the 4 hours. Is for the market giving us the low momentum candles, as we have always said, giving us probably the hammer signs, giving us the bullish engulfing signs. Already you can see the low momentum, which is what is currently formed at this particular level right here. So that's the low momentum candle. So what you want to see is what is series of low momentum candles at this level. Probably maybe get into this level, get rejected, they're giving us what is called the hammer candle. And once you can see all these reversal signals, once you can see the bullish engulfing or any of which you see, or if you can see one or two of those particular one at this particular zone here, then we'll be going on this market Euro USD on the long side. And of course, we always say it, our stop loss is going to be below the low which is going to form. We might not necessarily say it's going to be at this level. Sorry, let me bring this here. We might not say it's going to be below this previous low right here. Why? Because the market might open and push into this level, then have a rejection, thereby maybe form a series of of indecisiveness before continue in the direction which we've already predicted. So at that level, what we're going to be doing our stop loss is going to be below that next low, which is the new low we just formed. But if the market should obey this our structure, which is this blue one right here, this blue one which we've already built, then that means our stop loss is going to be at this level, which is below this previous low. You can see all this low right here, so it's going to be below that previous low. You can put it somewhere here if you have good risk appetite. They can be on the 1.19534 with our first take profits at the highs, which is at this level 1.21386. And of course, if it get broken our stop loss, you can still ride along with your stop loss, thereby move your stop loss from where it was to a new level just to secure up some good amount of profits. So that is for the Euro USD, which is our first one. And of course, from now on, our next one might not waste much time. We just tell you what you are expecting and why we are expecting that on our watch list. So let's go to the next one, which is the USD CHF. Okay, so of course the next we're gonna do mark the structure. Here the structure which the market is currently respecting. After market the structure, we go for our candlestick analysis. And before that, we mark our trend, forming a series of lower lows and lower highs. So what are we gonna be expecting? Currently, the market got to our trend line, got rejected, which was low momentum candle, and we are seeing something like an inverted hammer at that point already. So what we're going to be expecting is for the market to give us a good sign of bears coming back into this market with, of course, our reversal signals, which we always say. We said it previously that we can, in this level now, we can have the bearish engulfing, we can have the inverted hammer just as we already have. We can also see the inverted hammer is also a form of low momentum candle. So once the market probably opens with a gap or opens and gives us a good sign of bears coming to the market by giving us a good bearish candle, they can jump into this market on the short side with our stop loss above this previous high right here, which is the 0. Let's put it somewhere here, 0.91511, or you can still take it right above here to make sure you give it a lot of room to breathe. We can put it above this previous high, which is the 0.91640. And of course, as you can see, this is a good trading market. So what, as I always say, in a good trading market, once you put your stop loss, all you just need to do is towards right along with your trend by moving your stop loss. Once it breaks the next low and forms another low, you can now move your stop loss from where it was, of course, to the new low which we have. Okay, that is for the USD CHF. So let's go to the next one, which is going to be the AUD USD. As usual, the first thing we do is to mark our structure, which is where the market is currently respecting. I think let's move this way. Okay, good one. So you can see the market is currently respecting that particular structure. So what we're going to be expecting is not to see just what we just said earlier, which is a low momentum candle. What you want to see is the what is a low momentum candle signs and at the bullish engulfing. So once you can see the bullish engulfing, the low momentum candle, of course what we're gonna do is to jump into this market on the buy side. When I mean jump, you don't just jump into the market. Like, all you do to this, what, do your own analysis and compare it with this other one. If it works out well and gives you just what we just said, then you can jump into the market with our stop loss below this previous low right here. So our stop loss is going to be on the 0.76765. So that's where our stop loss is going to be. I repeat, the stop loss is going to be on 0.76759, sorry. And of course, our first take profit is going to be at this level, which is a 0.78007. Sorry, please, that's dog. So that's where our first take profit is going to be. And of course, if it gets broken, we're going to move our stop loss from where it was to that level. But if you've already taken your profits, you can just wait for the market to break that particular structure, give it signs of retest, more like a pullback and exhaustion. Once you can see that, wait for the push phase again, then we jump into the market, of course, on the long side. So that means we are still going to be what? We're going to be bullish on the AUD USD, which is the Aussie dollar. So let's go to the next one, which is the Euro JPY. The Euro JPY is already giving us good structure, but still let's mark out the structure which we are currently expecting to obey. These are previous structure which are expecting this market to obey. And of course, there was a mini structure at this level that can be seen clearer on the lower time frame. So if we do that, okay. So this is, let's go to the 1 hour so you can see that structure very well. Okay, so this is where the market is currently obeying that particular mini structure, or let's say low structure, because that structure might not be too valid. Looking at it, there are series of indecisiveness, no good momentum on that particular structure. The market just came to that with that previous support with series of low momentum candles, like no amount of, or not too much amount of BS in that market. So that is why we are seeing what that market might not really hold. But just in case it's hold, and how are you going to know if the market hold? Is if the market start coming in with good signs of bulls coming back into the market. You can start having the bullish candles becoming bigger and bigger, thicker and thicker. That's a sign that yes, this is a This is a sign that that the bulls are ready to take over this market. Otherwise, if it breaks below the structure, have a retest, they expect to come back to this level. And once that is done, then this is a good structure which we are actually respecting. So we expect the market to give us signs of bulls coming back to the market, breaking this previous structure, breaking above it, giving a retest, and of course continue in the buy direction. So that's our prediction for the Euro JPY. We are still going to be going to be long on Euro JPY. So let's go to the next one, which is going to be the Pound USD. This is similar. So let's go. So here is the previous structure which we are currently looking at. Okay, you can mark it as much as you can. So let's just go to the 4 hours so you can see it clearer. So here the previous structure where the markets are currently expecting. Just as I said on the Euro USD, the market came to that previous support with what? With fundamentals. How are you going to do this? What is fundamentals? You can see with good signs of what? Of bearish candle. No, it didn't form any series of what? Lower highs and lower lows. It just came straight into that support with series of what? Of high momentum candles. So what you're going to be expecting is what? This market trying to slow down by giving us low momentum candles. Once you can have series of low momentum candle at this level right here, then you can have good signs of bullish engulfing candles. Once you see those reversal signals, or you can have the inverted hammer, the hammer candle at this level. Of course, what you're going to be doing is what? Is to jump into this market on the long side, which our stop loss is going to be at this level. Our stop loss is going to be at the 1.37835, and our first take profits we are expecting to get to this particular level, which is a 1.39418. So once the market can get above that particular level, that's already a good that should be up to 1 to 3 risk reward ratio on the 4-hour chart. So that is, already know how many pips that's going to be. So that is for the GBP USD. We are still going to be long on the GBP USD, which is a pound USD. So let's go to the next one, which is going to be the New Zealand USD. Similar story, similar structure. Still marking out our structures. So here is the structure which the market is currently expecting. Forming was series of higher highs at this level. So what we're going to be expecting is the market still obeying this series of higher highs, because this is still a sign of the market reacting to a fundamental. So that is why we are going to be expecting this market to continue in that its previous momentum, which is in the up direction. So what we're going to be expecting is for the market to give us our usual signs of reversal at this level. Once you can see the signs of reversal, then we are going to be long on this market to our next take profit, which is going to be at this particular level right here. So that is where our first take profit is going to be, and of course our stop loss is going to be on this level. Let's check the value of that level. So the value of that level is 0.71093. Remember, our take profit we are putting at the level just if the market should obey the current state where it is currently. Remember, the market might open with a gap. It might open with a good bearish candle. So if all those happen, that means our structures, you have to wait for another structure to be formed, and that's if the market breaks above this blue structure here. Then that means the market is ready to start obeying our structure. You don't just jump into the market, you wait for it to obey our analysis, and once you can see just what you said earlier, then you can start trading along with our market analysis. So in short form, that means we are still going to be long on the New Zealand dollar. So let's go to the next one, which is the CAD Jpy one. Of course, that's going to be our second to the last. So let's mark the previous structure where we expect the market to obey. Here is the structure. So here's our structure where you expect the market to obey. Okay, let me just move this up. Okay, let me reduce the size a little. Good. So here's the structure. So we're going to be expecting this market to do is to give us signs of what? Or the market coming. Okay, let's use this to mark our mini structure, which is what we can see right here. You can see this on the lower time frame. Let's go to the lower time frame so you can see that very well. Or let's even go to the 30 minutes. Okay, so here is the structure which I marked earlier on the 4-hour chart. So let's still use it to mark it at this level. So we expect the market to what? Is to pull back to this previous level. So if the market gives us signs of what? Of pullback, and then showing signs of reversal with our reversal candlestick, so that means we are going to be going to be long on this particular trade. As you can see, this is a good bullish market. So we're expecting the market to just give us a pullback to this particular level, or to obey this particular level which it is currently. So if it obeys this by giving us the signs which you just said. Remember, that sign can occur anywhere so long as it's still above our structure. It isn't a must that it must get to that particular blue level which you already marked out. So long as it's still above that particular structure, and you can see those kind which you can see something like an arc, you can see the bullish engulf, you can see the inverted hammer, you can see the series of low momentum candles. Go along with the trend. No, it isn't a must that you must always get to that particular structure. Remember, it's a zone. So that means the buyer can come in anywhere within that zone. So long as the market is above that particular level, it doesn't break on that particular structure where it's obeyed, the buyers can still come in anywhere in that zone. So that is for the Chf Jpy. And of course, let's go to the last one, which is going to be the Chf Jpy. So this is the Chf Jpy. Similar story and similar structure. Let's say mark out our major structure, which is this one right here. So these are major structure. Then let's mark our mini structures. Let's use this to mark. Let's use this to mark our mini structure. And of course, this mini structure, you can see it on the lower time frame. Let's go to the 1 hour chart. So here is the mini structure. Currently, the market is obeying another level, which is this level at this level here. You can see that, right? But is this level going to stand? That we can't see. But from what we can see indecisiveness in that market. There's a lot of indecision in that market. The buyers are not winning, neither the sellers. So we're going to expect is for the market to break out of this particular range, which you can see at this level. So once it can break out of this particular range, if it's break above it, they expect a retest of that particular structure, and again, continuation of the trend. But if it breaks below it, shows signs of pullback, we expect to get to that our next zone, which is, let me go back so I can mark that particular zone. Okay, sorry, let me remove this first. Good. So we expect to get to this our next zone right here. We expect to get to this particular level, which we marked with this our blue line here. So once we get there, then we can expect the market to give us signs of reversal, thereby breaking above this previous zone, retesting it, and of course continuation. So that is what we're going to be expecting of the Chf Jpy. If it breaks below this particular level, we can expect to get to this previous zone, and of course showing signs of what reversal. Then we will ride along with the trend in the buy side, back to the up, breaking above this, and of course continuation of the trend. So that's going to be our analysis for the Chf Jpy, and that's also going to be the end of our analysis today. If you haven't subscribed to the channel, if you haven't joined the family, the subscribe button is in the red icon below. Please make sure you click on it, and don't forget to hit the bell icon beside it. And of course, give this video a thumbs up, and please do it to share with your friends, family, your loved ones, and mainly your trading friends, to make sure this information gets around to everyone that needs it. As a reminder, this is a financial advice. This is more of our view in the market. So please do it to do your own analysis. You can compare it with our own, and if it works with your own trading structures, if it works with your own trading style, then do it to join in our own analysis. And of course, we from Forexnetworkgroup, we wish you all a successful trading week ahead. I'll see you on Wednesday with our midweek review. And remember, that is going to be if the market gives us good signs of trading opportunity. And of course, remember, we're going to be our academic section, which is going to be talking about the best indicators. For those that still want to use indicator, what are the best indicators that you can use on a mobile phone? So that's what we'll be talking about in our next academic section. So for that, please make sure you subscribe, and don't forget to hit the bell icon beside so you can get notified once we post that video. So that's going to be the end of our analysis today. I really hope you guys enjoy it. I really hope it's useful, and I really hope you have a successful trading week ahead. Once again, thank you so much, and see you in our next video. Bye for now.